Hey everyone, and thanks for jumping back into the Precious Metalverse. Today, we're going to talk about gold, and we're going to be discussing its recent surge to over 3,300. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. You guys know we do a video on this channel where we discuss gold maybe 2 to 3 times a year, sometimes more, sometimes less. Sometimes gold's price movements are about as interesting as watching paint dry. But as we have discussed, we are in a macro environment that has been, and my guess is will continue to be, favorable for an asset like gold. One of the things that we said about, we came up with this hypothesis, and it was that whenever there's a deep correction by the S&P 500, we expected gold to also get a correction, but to then get to a new all-time high before stocks, right? We're in that macro regime right now. And it was not clear, right, if that would have actually played out, but sure enough, we just had a fairly large correction by the S&P 500 to the tune of about 21%. And during that drop by the S&P 500, we also saw gold sell off a little bit. It sold off 6%. And what happened is the minute that the S&P 500 started showing strength, even a little bit, gold used that opportunity to go to a new all-time high. Okay? Now, for the last probably 5 years, I have said over and over and over again that I thought that gold was a good buy below around 3,000. I've definitely been repeating it on ITC Premium for the last few years. I'm pretty sure I've said it on the public channel a few times as well. We're finally above that level. We're finally above 3,000. It is getting heated, right? It is getting heated, and I don't know exactly how high it's going to go. But what I would say is this. If the S&P 500 gets an even deeper correction, it is likely true that gold would take a hit, right? It is. And we've seen that happen before. If you look at, let's look at weekly candles for gold. If you overlay, say, recessions, you can see there's plenty of examples where when you go into sort of like a financial crisis style recession, gold's not immune to taking a hit, right? It's not immune, and it can take hits during recessions. But given that, even though that can happen, it's likely, in my opinion, that gold would then go to a new all-time high before the stock market would, if that were to play out. If you look at the financial crisis, there was a pretty deep drop in gold, right? I mean, it actually dropped like 33%. To give you an idea of what that would look like today, a 33% drop would put it all the way back down near 2,000 or so, right? It would almost be like testing this level that it broke out of. Now, that's not my current base case for gold. I still think it probably will continue to do well in the short term, but it is something to keep in the back of your mind. And so I've had a lot of people ask, well, do you sell into it? What do you do? Again, it's hard to say. It's going to be based on your own time horizon. But for someone like me, who's just spent a long time watching it slowly go up, I recognize that there are times where gold just continues to do well for years before the bull market for it is truly over. For example, if you were to look at the bull market that gold had that basically started in 2001, it wasn't truly over until 2011. You're talking about a 10-year bull market. A 10-year bull market. Now, you might look at this chart and say, well, if this started in 2015, is it possible that this one ends in 2025? It is possible, but if it were to go the same length of that last one, 544 weeks would still put you, pretty far out into even 2026, right? It would actually put you all the way out into about May of 2026. I honestly don't really think they're going to last the exact same amount of time, but it's a good idea to look at the gold chart because it can give some insight into what is theoretically possible. Now, we did videos on this a long time ago where we talked about the gold logarithmic regression trend line, and the general idea behind it right? The general idea, but I'm not really sure why it's getting cut off over there. But the general idea behind it is that you have your undervaluation territory, and then it went slightly overvalued, and then it came back and checked in with the fair value, and then it rocketed off into space before then slowly bleeding back down to the fair value and then going undervalued, right? So you basically have these different regimes, right? You have undervaluation territory, you have undervaluation territory, and you have overvaluation territory, which is arguably where we are right now. But that doesn't mean that gold can't go higher, right? I mean, it certainly could. If you look at the extension from the fair value, in this first rally, it was about 100% extension. But in the second rally, it was about almost a 500% extension. If you look at this rally right here, it was also about 100% extension. So far, gold is extended from that fair value by about the same amount as it was in 2011. About the same amount. Now, my thought process on this, though, is if it's going to play out like this pattern over here, it could certainly continue to go higher. And remember, we've talked a lot about inflation. We've talked a lot about 1980 and 1981 when Reagan took office and Volcker and what Volcker had to do to tame inflation. They had to induce back-to-back recessions. And it was actually in the first recession that gold ended up topping. It was in that first recession where gold topped and then it had a large drawback down. So if gold continues to melt up here, I mean, at some point, you could reach a level where it feels kind of like that, right? I mean, it'd have to go, a decent amount higher for it to be sort of that same level of extension. In fact, I imagine if you were to look at an RSI, which hardly should probably be used for gold, but let's pull it up on a monthly time frame since it moves so slowly, you can see that back in 1981, the RSI on the monthly ultimately reached 91. Currently, it's at 85. And you can see, right, that like the monthly RSI has topped out around these levels before, right? Like it's not entirely impossible for it to top out. But here's my argument, right? If it does top out and get a correction, I don't think that would be it in the short term. It could be something like this, where you get a brief recession and it drops back down and then ultimately continues to go higher. So I continue to remain bullish on gold. I do think that if the S&P gets a larger correction, you could see a pretty large drawdown by gold. But my guess is that it would be a decent opportunity if, for the people that were sort of late to the party. Well, those are my thoughts, right? I mean, those are my thoughts on gold. I do videos on it once every few months or so. And I would argue that there's obviously you have the bull market support band for it on the weekly, but I don't really think the weekly one is as accurate as the monthly one, right? So if you go over and you look at the bull market support band for gold, it's on the monthly, and generally you would expect, with the exception of maybe some wicks below or some brief periods below during recessions, you would expect it to keep support on this bull market support band. You can see during this decade, it only really went below once, and that was during the financial crisis. Now, right now, the bull market support band for gold, the 20-month SMA and the 21-month EMA, currently ranges from 24.44 to 25.29. So if there is a correction at some point, there will be, I would keep an eye on this level, because I would say there's a good chance that's where it would bounce off of in the event of a larger correction. So the momentum has been up for a while. Hopefully it continues to go up for a while. Whenever there's a correction, I think that is where it will check in with. And from whenever that level, wherever it does decide to do that, it would likely get a large bounce off of that level. Those are my views on gold. Not really that complicated. I think it is going to outperform silver here still in the short term. But once we see a pivot from the Federal Reserve away from QT, you might actually start to see silver outperform gold, just like you might see altcoins outperform Bitcoin once we get to that part of the market cycle. But we're still not there yet, and as far as I'm concerned, until we get there, you'll likely see gold outperform most other precious metals. You'll still likely see Bitcoin outperform the altcoin market. You'll likely see, stocks that provide value outperform all the micro caps in the Russell, right? So those are my general thoughts. Hope you guys like the content. Make sure you subscribe, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.